Hi everyone, welcome to episode 16 of Learn on the Go. After that slight deviation last week, let's get back to something that we all love doing, which is examining companies and improving our investing acumen. And today I want to talk about Vishnu Chemicals. As you might have guessed, it's into chemicals, specialty chemicals to be more precise. It's also a microcap, just 3,400 crores of MCap, as are most of the companies that I cover in this series. But this company is what I would call a monopolistic microcap, in the sense that it's small, but it's not too small. Let's go to the profit and loss statement. And you can see that in the last 3 years, all these last 3 years, it's clocked over 100 crores of profits. And the most remarkable thing is that this company creates something, it produces something for which there is no competition here in India. And even globally, it's counted within the top 3-4 companies in the world. We'll go through VCL's entire playbook in this video, their products, their growth drivers, financials, the competitive advantages, the kind of risks that they face, and we'll also gauge if there is an investing opportunity here. All right, so Vishnu Chemicals was started in 1989 by Mr. Krishnamurthy. And over these past 36 years, it has built many factories, has massive workflows, supplies to 50 plus countries with many clients and product applications. The company's business is securely anchored around two major verticals, chromium and barium. Presently, the company is the largest producer of chromium-based specialty chemicals in India with a market share of 60%, and globally it's amongst the top 4 players. VCL is also India's largest barium-based specialty chemicals manufacturer and exporter with a domestic market share of 40%. Let's get into specifics. Let's start with chromium, and here's a fun fact. So per the Guinness World Record, and I want to show this small clip to people who are still in their 20s and 30s, they might not remember this. Yeah, just watch this.
And now, your host, David Frost.
Hello and welcome.
Hello and welcome to the spectacular world of Guinness Records.
I used to love this part as a kid. Okay, so per Guinness, the hardest metallic element that is there is none other than chromium. Chromium is harder than iron, stainless steel, even titanium, and yet it can resist extreme temperatures. It is naturally resistant to corrosion, and because it has a mirror-like aesthetic effect, chromium is used across applications like pharma, automobiles, pigments, leather tanning, electroplating, etc. VCL's chromium value chain started with sodium dichromate, SDC, and gradually expanded to new products and derivatives like basic chrome sulfate, chromic acid, potassium dichromate, chrome oxide green, and white sodium sulfate. Do notice how varied the applications are for SDC and how different the derivatives are, which means if any of its customers is going through a downturn, it's very unlikely to have a glaring impact on the company. Vishnu Chemicals has a capacity of 80,000 tons currently. This is for SDC, sodium dichromate, and of this, some 30% is sold as STC in the market, while the balance 70% is converted into derivatives. This is pretty significant because until 2016, Vishnu Chemicals was only into SDC and BCS, that is basic chrome sulfate. But as we see here, by the end of FY23, this number had gone up to between 35 and 40%. And in just a couple more years, this number stands at 70%. The strategic positioning offers many advantages to the company in terms of higher margins. It also reduces the company's dependence on a single market or product. It widens the portfolio and revenue potential by adding multiple end-use industries. And it also raises the already high entry barriers, as the manufacturing of specialized derivatives requires specific expertise and stringent processes that very few competitors can replicate. In terms of competition, within India, there is none. The company enjoys a market share of over 60%. Globally, Vishnu's market share is between 8 and 10%, with the demand for chromium chemicals growing at around 5.5% per annum. Further, we've had major European producers, the likes of Lanxess and Elementis, exiting the chrome chemical segment due to mounting regulatory and cost pressures, which has created more opportunities for Vishnu. And thankfully, China is a net importer of chromium and is therefore not considered a major global competitor for VCL's products. So why is China a net importer? You see, China produces some 55 to 60% of the world's stainless steel. And what do you need when producing stainless steel? You need chromium, because typically stainless steel contains 10 to 18% of chromium inside it. And the problem for China is that it has only 2% of the world's chromite reserves, which means it has to import. And it does that from countries like South Africa, Zimbabwe, Kazakhstan, Turkey, and elsewhere. And this sort of insulates Vishnu Chemicals from the China factor as far as chromium goes. All right, now let's quickly look at the other key chemical, that is barium. Vishnu operates this segment, barium, as a wholly owned subsidiary, which was a loss-making facility initially before Vishnu acquired it from the Solvay Group in 2015 and has successfully turned it around. The key product here is barium carbonate, BaCO3, which is extensively used in ceramics, tiles, caustic soda manufacturing, and specialty glass. The barium carbonate is also converted into precipitated barium sulfate, or PBS, that is used in battery applications and especially in powder coating and the automotive paint industry. In fact, the BBC carried this news item in 2021, wherein researchers at the University of Purdue had created an ultra-white paint, so basically whitest of the white paints, that reflected more than 98% of sunlight. So obviously this can help save energy and fight climate change. But what actually enabled this particular thing was the compound called barium sulfate. So that's a nice piece of information to have. And in terms of capacity, VCL has 60,000 metric tons per annum for barium carbonate and an additional 30,000 metric tons for PBS. In fact, PBS is seeing strong demand in India, with Indian imports having grown by 50% in the last 5 years. It's also why the company is keen on doubling its PBS capacity to 60,000 tons by FY27. Okay, so this was a quick brief on the two key segments. As I said earlier, the company enjoys a 60% market share in chromium. Barium is 40%, which is remarkable for a microcap company, which also means that there are certain competitive advantages here. So let's examine what those are. The first is vertical integration, wherein Vishnu not only manufactures the basic intermediates like sodium dichromate and barium carbonate, it also converts them internally into higher value specialty products like chrome metal or PBS. This increasing shift towards derivatives captures a higher margin and also pricing power, as one can see here with the EBITDA margin now firmly in the 15, 16, 17% range. Even on a quarterly basis, the company shows predictability, which is very uncommon in chemical companies. And what do we mean by pricing power? It means that Vishnu Chemicals can pass on any increase in raw material cost to its customers, thereby protecting its margins. Okay, so Vishnu's second competitive advantage is raw material security, not all of it. As in, the company does not own any mines as of June 2024. But just last month, VCL finally announced the 100% acquisition of a chrome mining complex in South Africa. This mine contains chemical-grade chrome ore reserves of an estimated 10 million tons, which is sufficient to meet the company's raw material needs for the chromium division for the next 30 years and is expected to significantly improve EBITDA margins. Likewise, for improving the quality and consistency of raw materials, for barium manufacturing, the company acquired Ramadas Minerals Private Limited in 2023. VCL also does quite a bit of backward integration to produce sodium carbonate, or soda ash as it's commonly called, and this process allows the company to meet 40 to 60% of its soda ash requirement internally. A third competitive advantage is the company's diversification initiatives, which can be looked at in multiple ways. For instance, there's diversity in products. And in terms of revenue, the proportion of chromium is definitely coming down, giving the company a nice mix and balance. Presently, there's diversity in applications as well. And with the chemicals they manufacture finding use in 10, 12, 15 different industries, this flexibility enhances the company's ability to withstand cyclicity and sectoral downturns. So essentially, VCL sells a product that's not easy to disrupt. It has a good mix of domestic sales and exports. It exports to 50 plus countries. The company has over 100 clients and no single customer has more than 5% of revenue share. It also helps that the plant is very close to the source of raw materials. So most of it comes from here, which is at a distance of about 100 kilometers. And the plant is also very close to ports such as Krishnapatnam, Kattupalli, and of course, Chennai. Well, these are the facts, and based on this, Vishnu Chemicals does come out to be a strong company, a monopolistic microcap. I think that's what I said. And as to why no one is really challenging them in terms of the 60% market share that they hold, I think that comes down to the capital intensive nature of operations and also the fact that the manufacturing is a very complicated process which requires years to perfect. Okay, in terms of growth drivers, and I'm going to bundle growth driver, strategy, everything together. So the first one is import substitution. What is it? Well, very simply, it's replacing something that was imported from outside and to now manufacture it domestically. I think a good example of this from a Vishnu Chemicals perspective is PBS, that is precipitated barium sulfate. Now, the demand for PBS in India has always been strong, as revealed by these import numbers here. And so it made perfect business sense for VCL to start India's first PBS plant in 2023 with a capacity of 30,000 metric tons, which aligns perfectly with what India imported in FY24, making it a true import substitution. In fact, VCL is already looking into the future and has expressed an interest in doubling their PBS capacity. However, no concrete plans have been announced on it yet. Vishnu's second driver of growth is product expansion. A key focus here is to enter high purity chrome metal production, targeting niche applications like aerospace, defense, gas turbines, and medical alloys. The plan is to launch this product this year or the next. An even bigger focus is VCL's foray into strontium chemistry through the acquisition of Jayansri Pharma Private Limited. This is again an import substitution story with the strontium carbonate. That's the chemical compound that's used extensively in the production of ceramics, glass, in electronic components, and EV batteries. The annual domestic demand for strontium carbonate is around 4,000 to 5,000 tons. But given its potential, VCL is building for up to 12,000 metric tons of capacity, with production expected to commence in Q3 of FY26. So that's this quarter. In terms of revenue potential from this new vertical, the management is looking at around 150 crores a year once the unit has reached full capacity. The third driver of growth is, of course, capacity expansion. So first up is SDC, which is sodium dichromate. And per some research reports, the plan is to increase it from the current 80,000 metric tons to 100,000 metric tons by FY26. On top of this, VCL is adding a capacity of 12,000 tons for chromium oxide and chrome metal from this quarter. And of course, there's the 12,000 tons of strontium carbonate that's coming up now, and also the potential 30,000 tons of PBS on which not much is known. Another very interesting part of Vishnu's strategy is its robust track record of acquiring underperforming units and successfully turning them around. This happened in 2016 when they acquired, or rather reacquired, what is now their barium business from the Solvay Group, which was then a loss-making one. The acquisition of JPPL for Vishnu's foray into strontium chemistry was a calculated move. The company paid 52 crores for it to receive a gross block of 80 crores, and the company now has a strategy and aspirations of clocking 150 crores in revenue 2 years from now. A similar thing happened with that barite beneficiation company, Ramadas Minerals Private Limited, on which the management reported break-even in the very first quarter of operations. Finally, let's count exports as a growth driver. And it's not that everything that VCL produces gets exported. On the contrary, the company has maintained a domestic versus export mix of 55-45 for a pretty long time, and that's quite pleasing to see. Vishnu Chemicals already serves customers in 50 plus countries, including those in Latin America, the US, and Europe, which provides a nice hedge for its Indian operations. But as the company grows its operations, its product portfolio, its capacity, I do see a more rigorous effort being made by the company to capture global market share. So these were some of VCL's strategic/growth drivers. And a good understanding of these is critical to assessing whether they support our investment thesis on Vishnu Chemicals or not. And speaking of support, I'd like to take this opportunity to thank Power Up Money for their support of the work that I do on YouTube. They've been very flexible, very accommodating, and wonderful partners to work with. In fact, I'm trying to do something for them this time, something that I've never done before. A webinar. It's happening this weekend on the Saturday. And if you're a Power Up user, then do check out the registration link. It'll be already on your mailbox or something. And yeah, we can definitely chat up there. Understandably, the seats are limited. For the rest of you, I'll try and procure a registration link from Power Up Guys itself. I already told them about it. So once it comes in, I will pin it to the comments and maybe post it as a community post. Yeah, do have a look, and it'll be great if you can join me for that particular webinar. All right, now let's look at the financials. And if you're a long-term shareholder of the company, then this is what you want to look at. So see this, it's a sales growth of around 15%. A compounded profit growth of somewhere around 20%. Even the stock price has increased by 20%. I'm actually looking at the 10-year numbers more in all these cases. And yes, the return on equity has been a consistent 20% as well. Let's now look at sales. And the sales growth has been upwards of 19%, quite a number of times actually. So in the last 8 years, the company has clocked over 19% in sales on 1, 2, 3, 4, 5 different occasions. However, if you really want to understand this business model, then it's important for us to understand why did the company degrow in these 2 years, in FY20 and in FY24. So very quickly, the 12% drop in sales in FY20 was on account of global economic slowdown, which shows that while VCL can protect its margins, it is not safe from a recession. And the revenue decline in FY24 was for a very different reason, which included a correction in the selling price, as in the value of sales dipped in spite of the company selling its highest ever volumes. And secondly, the Red Sea crisis pushed up freight costs, leading to subdued demand as customers preferred to use up existing inventory instead. Okay, the next significant item in the P&L are the operating margins, the EBITDA margins. And after many years of 13, 12% kind of numbers, it suddenly jumped up to 15% in FY22. These margins have remained 15% or more over these last 3-4 years. And as an investor, you definitely want to understand why this was the case. So my research shows that there were a couple of reasons for it. The first was this massive jump in sales that happened. So from 679 to more than 1,000 crores. And this led to a lot of advantages, which included economies of scale benefits, better pricing power, and some kind of an operating leverage has definitely come, especially in the chromium business. The other reason, which I feel, is what happened again in FY22, that particular financial year, wherein a lot of the soda ash production was done internally due to backward integration. And if I remember right, in one of the transcripts, the management said that this would have led to a saving of 200 to 300 basis points. So you add 300 basis points to 12% and you're at 15%. So maybe that's what has really jumped up this number. And over time, with the proportion of derivative products also increasing, that might be the reason why, a 15% hops up to a 17% consistently now. In addition to this, on the revenue front, the company was getting big on the barium front, having expanded its capacity from 40,000 metric tons in FY21 to 90,000 tons in FY25. In fact, the last financial year, FY25, was a brilliant year for the barium segment, with volumes growing by 30%. Okay, so depreciation is increasing. It has to, since the plant and machinery is increasing and all these acquisitions that the company has made. Even in terms of interest, or rather the interest coverage ratio, there doesn't seem to be any problem. Let's quickly calculate this. So your numerator is the EBIT, which is 229, which is your operating profit, and we subtract the depreciation from it. So that's 38. And this has to be, and 191 crores, and this has to be divided by the interest. So that's divided by 38. This comes to 5.02, which is, quite comfortable actually, with regards to what credit rating companies definitely ask for, which is a minimum interest coverage ratio of at least 3. Okay, so That said, the debt has definitely increased in the company. So what was somewhere around 300s has now crossed the 400 mark. And to some extent, it is understandable with all the acquisitions that the company has made, and including that South African mine, etc., that they've bought. So that obviously takes up some amount of cash. And also, there's a lot of capex that's going on within the company. So the internal accruals can only do so much. So the rest of it has to come from external debt. So I think that's what is happening here. All right, let's look at the ratios now. And firstly, the ROC, the return on capital employed. So this has been around the 20% mark for the last 2 years. So 20% and 18%, which is okay. The ROE is, I think we saw that earlier, right? Yeah. So the ROE is about 20%, which is also pretty acceptable. Let's also look at the cash flows, cash flow statement, and cash flow from operating activities has been positive for every year, the last 11 years, which is actually a very good sign. Okay, now let's turn to the valuations, and on a P multiple basis. Okay, so it's been around 24, 25 for a large part of the last 18 odd months. It's somewhere very close to the median, which is 22. This median is not something that I really look very intently with, on the face of it, this 25 seems to be not undervalued, not overvalued, seems to be a bit fairly valued, although I would love it if this can come down even further. But if you look at it more from, let's say, a PEG ratio perspective, so the company has been growing by about 20 odd percent, right? Yeah, so we have to look at the EPS growth basically, not the sales growth. So with the profit growing at about 20%, we can assume that the EPS is also somewhere on that number. It seems to be around that number only. So effectively what you have is a PEG ratio. The numerator is your current P ratio, which is 24 point something divided by about 20%, so 1.2. So a PEG ratio of 1.2 means that it's somewhere fairly valued as far as valuations are concerned. Which means the real question is, will Vishnu Chemicals continue to grow, and what gives us the confidence of that? A few things actually. Again, it's not a recommendation, but just some facts, figures, and some opinions that I've compiled based on whatever that we have looked at so far. For instance, and first up, is the expansion in the barium portfolio, including PBS, and the fact that barium as a segment grew by 30% in FY25. A potential acceleration in sales and profits is from the about to be commenced production of strontium carbonate, which has a ready market of 4,000 to 5,000 tons in India. Then there's the chrome ore mine and beneficiation plant in South Africa that VCL has just acquired with the aim of securing 30 to 50 years of chemical grade chrome ore supply from there. The forward integration that's underway into chrome metal, which is a highly specialized and high value product used in super alloys for the aerospace and defense industry. Point 5 is the prevailing theme of premiumization, wherein people now want shiny bathroom fittings and chrome finishings on their cars, and thankfully the chemical compounds produced and sold by Vishnu Chemicals are what's needed to manufacture those premium experiences. And although I don't have complete clarity on this, it said somewhere that the company plans to expand its sodium dichromate, its SDC capacity from 80,000 to 110,000 metric tons per annum by FY27. This is aimed at increasing VCL's global market share from the current 8-9% to 12%. All right, so this was an abridged version of the research I have done. It wasn't very easy. For some reason, the management has reduced the number of earnings calls that it does, which is a shame really, and I do hope the management does something about it. Speaking of the management, the company is mostly led by these two gentlemen, Mr. Krishnamurthy, who started the company, and Mr. Siddhartha, who is his son. The two of them, including Mrs. Manjula, they own 69% of the shares of this company, with some FIIs and also some DIIs participating in it. Overall, it doesn't seem the company has caught the eye of retail investors, which is actually good for us because it gives us time to process, research, and analyze the company without any of the hype or emotions like FOMO meddling with our thought process. That said, let's also do a check on the kind of risks that the company faces. Firstly, there's competition. And although it faces very little in India in the case of chromium, because China is a net importer, but as far as barium goes, China is a big player there and exports large quantities of barium carbonate and precipitated barium sulfate to the rest of the world. So definitely watch for dumping activities and any sudden changes in the price of raw materials. A second risk is on account of currency volatility. And with 45% of VCL's revenue coming from exports, this has to be factored irrespective of the pricing power the company enjoys. Also, as we saw in FY20, any slowdown in demand, especially in end user industries like pharma, paint, ceramics, electroplating, wood preservatives, etc., can drag volumes and realization, although the company is well diversified. Then there's execution risk in the sense that acquiring a mine in South Africa is one thing, but to run it optimally and make a profit out of it and doing it all in a foreign country can become challenging at times. And the last and perhaps the gravest of risks is the environmental factor, and operating in the chemical industry comes with plenty of them. Disposal of waste, employee health and safety, pollution control, environmental concerns, all these matter. And from what I've read in the annual report, VCL takes a lot of care in ensuring there aren't any issues on this front. Yet the risk is very much there. All right, so this is what I have on Vishnu Chemicals. I started this inquisition by saying that this is a monopolistic microcap, and hopefully through this video, you now have an understanding as to why that might be the case. Very quickly, in addition to solid market share in the chromium and barium segments, VCL also has pricing power. There is zero competition. The business comes with huge barriers to entry. VCL has been in existence for 35 plus years. It's vertically and backward integrated. This builds cost efficiency. The plant's proximity to its raw material source and also seaports is a big advantage. The company is getting into new chemistries. It's also expanding capacities, either organically or via acquisition. It now has mines in South Africa that ensure self-sufficiency in raw materials for many decades. VCL is quite diversified as a company in terms of products, the sectors it caters to, and geographically, with domestic sales and exports on an almost even keel. Sales and profits have grown by 15 and 20% respectively over the last decade. And in my opinion, the fire hasn't died. The management has been into it from the very beginning. EBITDA margins are stable at 17-18%. And valuation wise, it seems fairly valued, although I'd love to hear your views on it as well. And there are quite a few positive offshoots that should help with future growth that I covered in the video, and there are some risks as well. The way I look at it, Vishnu Chemicals is not a commodity story, at least in the way we look at other chemical companies. The discussion, and even in this video, we did not discuss anything about price cycles or overcapacity in the industry or China dumping their product on Indian shores, etc. I think to that extent, Vishnu is playing a very differentiated game, and it's probably the reason why it's been under the radar as compared to other chemical companies which are extensively covered around social media. That said, I do have a tracking position in this company. I've not made any money so far. It's still par for the course for me. But yes, I am looking at this company for a long-term perspective. And if the price comes down even further, then obviously, it kind of takes a lot of things as far as I am concerned. But please don't take my word for it. I have this habit of being wrong most of the times. So please do your own research. It'll be great if you can share your understanding or your point of view in the comments as well, and we can have a very healthy discussion around it. I hope you liked this presentation. This was a lot of work, but I'm very happy with how this entire thing has come out. And I'll be back very soon with something equally good. So I wish you well, and yeah, bye-bye.